Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program this week, Jamie Carrasco. He's the portfolio manager, a portfolio manager at Canaccord Genuity. And we had Jamie on just a couple of weeks ago. The discussion garnered so much interest, and we really didn't finish getting through all of our ideas that I thought we'd get Jamie back on the program sooner than later. Jamie, one of the things that you kind of left off and teased with on our last discussion was the fact that China was launching this yuan-backed, gold-backed system to trade oil, which of course is a direct threat to the petrodollar. Now, people have been talking about the petrodollar is going to die. It's going to die for some time. But you actually think this is a formidable threat. And now with it launching, what are you seeing happening?
Let's review a little bit of what they were saying about the petrodollar not working, because I think not everything was in place for the petrodollar to fully function as I see it, the way it's being set up today with a completely gold-backed delivery. So in essence, we'll pay you in gold if you don't want to accept yuan. It's the fact that when this was originally envisioned back in 1994 or so, right around the year 2000, it was the first time that they've tried to launch it. It's been on the works for quite a while. Was the fact that the Chinese didn't control almost 18,000 tons of gold, right? The central bank has told us they have 1848, but we know anecdotally because of the fact that the Chinese work in a metric system, not in a pound system, that a lot of the gold that was filtering from the west to the east was transferring either to Switzerland or the Perth Mint, which was connected to Macquarie, who I used to work for. And so they were smelting all the bars from imperial bars to metric bars to kilo bars. So we knew whose gold was being smelted and transferred over. And that's why we know anecdotally that the Chinese have transferred almost 18,000 tons. They have it. And because of that, they can start to pay for energy with gold. Now, that's an important factor because it's going to compete head-on with the petrodollar. And that is the glue for the current monetary system since Nixon unpegged us from gold, since we became a fiat currency. And that glue is the fact that since the world transacts energy, which is the biggest piece of trade, in dollars, it has forced other countries to acquire dollars to pay for energy. Think of Chile, for example, who doesn't produce any energy, but they need to buy energy, and they buy it from Saudi Arabia in U.S. dollars. And because those purchases have been going on for 40 years, the next step was to buy U.S. debt, by default, the 10-year bond. It's the reason why the 10-year bond is owned by everybody and pension funds around the world. It's probably, I would imagine, the world's most held vehicle of all of them is the 10-year treasury. Now, by offering to pay for energy with gold and an alternative to the petrodollar, the biggest energy purchaser, who consumes almost 9% of all of the energy in the world, has said, well, we're not going to pay in U.S. dollars. But now you have to understand how everything starts to fall into place. That will put lower the demand for 10-year bonds, because right off the bat, China doesn't have to buy U.S. debt anymore to pay for energy. And then Chinese trading partners will also start to fall into line, including starting with the sellers of energy to China, who all of a sudden now are not getting paid in U.S. dollars, are getting paid with gold or yuan. Then come those countries that trade with China. Think of Chile, for example. Chile produces almost 35% of world copper. They're selling the bulk of that to China, and they're getting paid in U.S. dollars. That eventually will start dropping. It won't take long before Chile says to China, great, those dollars are dropping. Why don't you pay us with gold as well? And then everything starts to fall to place. So one has to understand the mechanics of global trade and the use of gold. Now, what the contract is really also signaling is how much the dollar has depreciated against gold since 1971. What do I mean? I posted today on LinkedIn the trade numbers and the trade volumes of the petro-yuan just for this week. And I find it interesting that they launched it just for the last week of March, because it means that the first delivery of gold is going to be just for 1 week. Well, it was $8 billion that traded in Shanghai on Monday versus almost $8 billion in Brent. Throughout the week, those numbers have appreciated. So let's stick to 8. So we're looking at $40 billion, which equates to almost over 900 tons for the week. Well, the world produces only 2,700 tons, and 30% of that is held by Russia and China. So that kind of gold just doesn't exist, right? And so it really signals how much the gold has to appreciate, but it really signals as well how much the dollar on a trade basis has devalued, and what kind of a readjustment in purchasing power we will have to see as gold functions as money again.
Jamie, what you're laying out is a bit of a domino effect, and of course, when the first domino drops, it's not a very long show till the end. But as a skeptic, I guess I would point to the fact that people have been talking about the fact that we trade as much above ground silver or annual production in just a few days or weeks, and the same can be said for gold on existing exchanges at times. So I guess the difference would be if settlement were actually to take place, and you were also telling me before we hit record that the system in place is much different for this new exchange where the contracts are actually tied to gold.
Correct, and that is the key. That the energy seller to China, who has participated in this contract, has the ability to convert either from yuan or gold. I would imagine that if I am participating in this, I don't particularly trust the yuan too much just yet. Well, I'm going to take gold, right? And even if 10% take gold, we have a problem, because gold today in London trades in multiples much greater than the physical amount that is actually taken out on the paper side. And because of that, it's that leverage that's coming to an end, because we've been silly enough to think of gold as a pet rock for the last 40 years, and the Chinese are about to change that. Now, what is important is that the initial contract is going to come out, the delivery is going to come out of London, and that's why in London, since about last October, gold has been traded in yuan. Like, this has been set up and been prepared for a long time, so it's no surprise to those that understand the mechanics of what is happening. And because of that, what they're going to do first is drain the West gold facilities and allow the price to rise, so they're not using up their 18,000 tons. I personally think it's Sun Tzu at its best, and it's very much in line with the way the Chinese think. They've taken their time to prepare this, and now they're ready to strike.
Jamie, as I recall from studying history, part of the pretense for establishing the petrodollar went back to arrangements with the likes of Saudi Arabia that they would use the dollar against any other system. And in order for this new system in place to actually change the existing one, of course, people would have to switch over. So when looking at these major producers of oil, what do you see as the impetus for them actually stopping to use the dollar?
Greed, for starters, but I think it's more important because the U.S. is no longer a big energy buyer. They don't need to sell to the U.S. anymore. China is the biggest buyer, and people, I think you have to understand that the Silk Road or the One Belt Road Initiative, which is the whole infrastructure projects that are going to be built in Asia, are going to really be the next 100 to 200 years of global growth. That's where the growth is actually going to take place, in the same way that the U.S. was after the 30s and 40s, became the biggest base for growth in the world. Well, what the Chinese are saying, yeah, this is our backyard. This is what global growth is going to be, and why do we have to use the U.S. dollar? We would rather use gold. In essence, they're replaying history themselves, because that's how the initial Silk Road, which again was the system that stood in place when Marco Polo gets there and when the British dismantled it through the Opium War in the 1800s. And the money of that system was gold. And it was gold because they had already learned the problems with fiat currencies, right? And so the Chinese have a long, long history, and they remember that history. And it's funny because that's exactly what Xi said in the 3-hour speech that he gave last November at the conclusion of the next 5 year impendium. I can't remember what they call it, but for their Congress, which I think was the most important election last year, because he laid out the road for the economic plan for the next 5 years, and he said we're going to rebuild the Silk Road, and we're going to use the same monetary system as before, right? And that's what they're doing. They're going toe to toe in taking full control of the growth of Asia and their backyard, and they're going to use the money that they feel that they control now. In essence, they're transferring the purchasing power from the dollar to the yuan in the same way that 100 years we would have been having the same argument between the pound and transferring the purchasing power to the dollar. How is the U.S. going to pull this off, right? I think the more important issue, back to your other question, just the prior one, from a history perspective, the best way to understand what's about to happen is that quote from The Sun Also Rises, where the protagonist asks this American, so how did you go bankrupt? And he says, well, it was gradual and then all of a sudden, right? Because that's what's going to happen as the credit cycle unwinds. We're going to start to see interest rates start to appreciate as the world's need for U.S. Treasury continues to dissipate, and interest rates will just escalate going forward, right? At what point does it become an avalanche? Well, we'll have to see. It could be quick. It could take a little bit longer, but every day is going to get exponentially greater.
Right. And in our last discussion, you talked about the timeline that you could see the interest rates move up. And it was, as you just said, it was an exponential curve and pretty quick. But that's kind of happening all on its own. And then the discussion today about this new system that's been launched backed by gold via China, we've only had a week to see it play out. But do you have an idea, even if a premature one, on when we'll see the effect of that new system on, say, the price of the dollar or the price of gold?
Well, I guess we're going to have to wait till the deliveries start to place. The one thing I haven't looked into yet is what are the full particulars of the contract. Here in North America, the contracts usually settle 3 months out. I don't know the exact settlement of when this week's purchases of futures need to be paid for, but on that point, we're going to see a massive withdrawal of actual physical. And then we're going to start to see some fireworks start to occur. So that's what I mean. When does it become an avalanche? The bottom line is I don't think the West has the gold inventories to satisfy this trade. I know the Chinese do, but I think they're going to wait until the price readjusts so that they're not spending some of their 18,000 tons. So I think one of the issues is that we have a number of catalysts that could really unravel things. If look at what happened in February when the market dropped 4%. They're doing everything to try to keep the market from rising. Why did the market rise 700 points on Monday on the same day that they started a trade, one of the biggest trade war between the two biggest economies in the world, and the market runs up 700 points on light volume? At some point, investors better start questioning these things, because they're in for a big awakening. Now, let's talk about something, because it's the message being presented in the West. Don't you find it interesting that the tariffs were announced to start the Friday before the petro-yuan started? Well, because then they've changed the narrative in the West. In the West, what is being presented? That all of this market volatility that we're starting to see is the result of the tariffs. That's a great message, and the message is that at the end of that trade war, as long as it takes to make America great, well, when it's done, we're going to be back to the same thing as before. And I'm arguing no. When it's done, the monetary system would have shifted completely. So it's going to be a completely separate reality. And that's important for people to understand, that the mechanics of the petro-yuan is really the way by which the Chinese are going to take the purchasing power away from the Americans. It's the transition that is usually inevitable when we have to cleanse the debts on a global basis. It happened in the 30s. It happened prior to that. Is how hegemonic financial power transfers from one country to the next.
Jamie, I would assume that if this this system takes off, the price of gold obviously is going to appreciate, at least in dollar terms. Now, this is going to open up a can of worms and maybe a discussion for a whole nother day, but if indeed the United States does have their quoted amount of gold at Fort Knox, and the Chinese have somewhere in the range of estimate of maybe a similar or an amount about half of that, if the price of gold goes up and all of this happens as a consequence of this new system being put in place, doesn't that leave the U.S. unscathed at the end of the day? Because at the end of it, whoever has the most gold in a gold-backed currency holds out okay.
Yes and no. I think it's important to understand that on the a long-term basis, if they have their 8,900 tons, the things are good because they'd be able to rebalance their financial liabilities against those inventories. The same thing that Roosevelt does by raising the price of gold from 7 to 35. It just rebalances the asset side of the equation. However, it doesn't negate the fact that the what Greenspan calls the entitlement system, all of these entitlements of Medicare, Medicaid, Social Security, the money isn't there. And what they're about, if that process occurs, those liabilities are going out the window. So we have a massive social dislocation coming as well, where the social promises that have been done through all of these pension funds, through all of the social promises won't be paid, right? So you're going to have a similar situation as when the Soviet Union breaks up and those countries were broke and they couldn't afford to pay those benefits. So that social issue will create dislocations that will have consequences as well, right? So it's not an easy solution, but it's a solution that sooner or later will have to be applied.
For sure. Well, Jamie, we're about out of time here, and I just want to thank you very much. Your wealth of knowledge. We had so many positive reviews from the last time you came on, and hopefully we can do this again soon. Before I let you go, is there anything else that is on your mind at the moment or that you just want to add to the conversation we just had?
Yeah, I think an important point is I'm looking at Canada, being Canadian and living here. I think it's important for also Canadians to understand that we're in a bit of a pickle because, you know, our biggest industries, we don't have the ability to move them to Asia. So I think Canada is also might want to think about what is about to happen because, for example, our energy, we can't ship it to Asia. We don't have the harbors or the pipelines to even get it there. So we're beholden to our biggest buyer, which is the US, right? And because of that, I think Canadians as well better prepare for what comes and have a clear understanding of what is the road ahead and how to position themselves as well as possible and protect the purchasing power of Canada because the US, the Canadian dollar is going to get hurt, right? The fact that we can't sell our things to Asia means that to some extent we won't be getting paid in gold. You know, I don't think the Americans are going to start using the petro-yuan and start paying with gold anytime soon, but we're going to be beholden to their currency. And because of that, I think as Canadians, we have to hedge and prepare.
Well, that makes a whole lot of sense. Jamie, you're pretty big on LinkedIn.
Yeah, so that's the best place to find me and just follow me through LinkedIn. And I'm trying to keep my blog updated as much as possible with these alternative views of mine, you know, because I think right now I'm one of the few that sees the world the way I see it turning. So far, it's funny because just on a last note, you know, back in 2008, I was one of the few that I was on BNN in January of 2008, and I was asked what was my opinion going forward. I said I'm being very cautious because I saw the credit cycle unraveling, right? And in 2009, I was called back. I said in 2008 that I was 25% in cash and getting ready for some big issues coming down the pipeline through 08. In 09, they called me back because by January of 09, everybody was selling by that point. And they said, what are you doing? And I said, well, I'm fully invested because they're going to bail out the system. And I said something that I think we're here, where I said, look, what we've done is bail out one sector, but transfer the liability to governments, which means that we've solved a debt problem with more debt and just kicked the can down the road. However, because now it's the governments that are in trouble, historically, when we get to that point of debt saturation, we got to go through a monetary shift, that's how history has always resolved that. So this is not something that I haven't, that was new to me. I saw it developing and setting up for a long time. When the Chinese announced that they were going to use the convertibility feature of the petro-yuan, it all came together. The puzzle was clear, because in '08, it was a bit of an issue in terms of, well, who is going to back their currency by gold? Who would do that? The fact that the Chinese solved it so simply, they just started using gold as money, is the reason why the power shift is here. But it was something that became inevitable in '08 when we solved that problem with more debt, right? So to me, it's just a transition of everything that has taken place so far, and here comes the cleansing.
Yep, makes a lot of sense. Well, Jamie, thanks again for your insights and coming back on the program, and we'll certainly do this again in the coming weeks.
It's a pleasure anytime. I'm always happy to chat.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?